Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about market moves, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's Skool Community. Enjoy guys.
Let me start by just talking about what the probabilities are of price getting into the profit tent. This is a distribution chart of the daily moves on the S&P 500 since the year 2000. So it's basically a bell curve, right, showing you all the possible moves that could happen. If you were to look at the scale, you would see that this is going up, or the size of the move going positive. So moves way out here are really big moves, and moves close to zero are small moves.
Okay.
And those are positive moves, and then these are negative moves. And then the vertical axis is how often those moves happen. So you can see right here, there's a red line. That red line represents a 0% move. So the interesting thing about that is that obviously 0% is one of the most popular moves because it's one of the tallest bars. The other thing that should be really obvious is that the plus and minus moves are almost equally distributed. There's an equal number of plus things to the right of the zero and about the same amount to the left. So this is about 50-50.
Okay.
So this is really important because all of our strategy in terms of expectations and what you should see in terms of probabilities happening on a daily basis are based on this. All right. So a 1% move is right about here, a positive 1%, and a negative 1% move is right about there. So that's negative 1% and that's positive 1%. Those total moves of all of these here, you can see that's quite a bit. All of these moves, that's about 75% of all the moves that happen in the market.
Okay.
Now, there's a remaining 25%. That would be all of these moves that are outside of this box, out here and then out here.
Okay.
Now, we break those up. It's not 20, it's 25.
Quick question.
Yeah.
Are these moves off of the prior day close or open? Because you said it's SPX, right? So it doesn't account for overnight action?
It's where they end up at the end of the day. So
From where? From the end of the previous day or the beginning of the day?
The beginning of the day. So the market opens up and then it's going to either end positive or negative from where it opened.
Okay. But it doesn't take into account any overnight action that might have gapped it. Okay.
No. So it's going to either end up or down. And then we're measuring, okay, that's about 50-50. And now we're going to measure how big those moves are. And most of those moves are going to be small. 75% of them are going to be between minus 1% and positive 1%. And if you watch the market enough, and if you see what the percentage move was on any given day, 1% represents like on the high side of small to the low side of medium move, because there are lots of moves that happen 1.5, 2, 3, whatever. But in terms of probabilities, those are less frequent. But the vast majority of them are between positive, plus or minus 1%. And then the remaining 25%, we usually break that down just for convenience into two groups. One is what I would call medium moves, and the other is outlier moves, the really big moves. And so we break those down into 20 and 5. So the 5% ones are these really big outliers down here, and then the 20% ones are these ones. So both sides, right? You add them up. Now this is super important, this ratio, because this is going to play into exactly where you're going to see this percentage of moves happen on our butterfly, like I said before. Now, because we're only picking one direction, then what we're really seeing is half of these numbers. If we pick one direction, then we know 50% are going to go against us. And the other 50%, which would be half of what's remaining here, would be a 37.5% move would be the small moves. Half of 20 would be 10% would be the medium moves. And then half of 5 would be the 2.5% moves. So this is what we're going to see coming towards our fly. You can see obviously the small moves are going to be the vast majority of them by a long shot, almost 4-to-1. It's actually like 3-to-1 or something like that. Would you agree with that? It's about 3-to-1.
Yes.
So most of the moves are going to be small. Now, first of all, we take 100% loss on the losers. We don't manage them. And the reason why we don't manage them is through our asymmetric risk to reward, the amount that we pay for that risk, we make it small enough so that even in the worst case, we could withstand multiple losses in a row and still remain above our target drawdown. So that's another very important point. We size it very specifically. This whole 1-to-9 risk to reward ratio, making it 10% of the width and all, that's all calculated to give us that asymmetry to help us achieve really low drawdowns and small volatility of our returns. That's why I say you don't want to go much over 10% of the cost. You want to go 10% or under. In some cases, you can go a little bit above, but don't make a habit of it. Try to get below 10% of the cost. And it's all for that, for maintaining that drawdown and the volatility of your returns. That is more important than anything because that goes directly to our primary tenet in this strategy, and that's capital preservation first under all conditions. We're trying to preserve our capital. And I've said this many times to people too. I say, we want to become the best possible loser, someone who can manage those losses and always stay right near the zero line and always be a few trades away from making a new high. We don't want to draw down. And when you start taking positions that are too big, that's when you start drawing down. The volatility of your returns get much bigger when you take too much risk. And $2 might not sound a lot for a 15 wide trade, but it is way too much for that size trade. A $2 debit should be for a 20 wide trade. That's super important, that ratio. So you got to make sure that you place your trades such that you get that ratio, because in the long run, it's going to be to your benefit.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.